Roger, great to chat with you to recap what has been a transformative year for Southern Palladium. To start, you've recently returned from investor roadshows in Hong Kong and London. So what was the feedback like from global investors, both for the Bengwenyama PGM project and the PGM market more broadly?
Alex, thanks for having us online on this interview. And just to say to you, fantastic roadshows across to Hong Kong and across to the UK. Really good sentiment. It's really nice to have these fantastic PGM tailwinds coming through. But it started obviously about 4 or 5 months ago with the pickup in PGM prices. And those tailwinds kind of like help you open doors. But also there were a lot of work that we had done in getting Southern Palladium's Bengwenyama project onto the radar screen of the investor community. Just if I go back to the PGM market space side, I mean, just think about it this way. PGMs have been some of the best performing precious metals so far in 2025. The best performing one has obviously been silver. That's up over 100%. But the next best is actually ruthenium. That's a PGM, up 95%, followed by platinum, which is up 85%. So, and gold only up about 60%. So in fact, some of the best performing precious metals so far this year have been platinum group metals. From our side as Southern Palladium, we've been really focused on doing a number of things. And as you said, transformative year. We produced an optimized PFS in July. We raised a further $8 million and just recently another $20 million. Those are Australian dollars. Fantastic support from our cornerstones. And we've got a number of new international investors, fund investors coming into the company from US, from the UK and from the EU, broadening our shareholder base. But I think as we progress the project, we've done a lot of work just to continue de-risking the project, and we've been really emphasizing to that investor community out there that this is one of the last genuine world-class tier 1 low-cost high-grade assets out there.
Now, just turning to the Bengwenyama project, the company's latest ASX announcement detailed a busy works program ahead of SPD's forthcoming definitive feasibility study. So what attributes should investors know about as this project moves towards development?
Alex, the first thing is that the project is located in South Africa on the far eastern limb of the Bushveld complex. South Africa has 86% of the world's known platinum group metal reserves. So it is, simply put, you want to be in PGMs, South Africa is the place you got to be. This particular project is high grade, low cost, very close to surface. We literally, in the south decline, will be intersecting reef at 50 meters. It is a project which has enormous scalability. We're looking at doing it, once we have completed our optimized PFS, we're looking at doing it on the basis of a 2-stage development process that helped reduce our capital funding or peak funding requirement. That went down by 38% down to $279 million US, which is again much more fundable. We can fund the entire second stage out of the proceeds, the cash flow that comes from stage 1. But in stage 1, I mean, it's just so close to the surface. We have a number of other areas that we will unlock value, and I'll talk about that in a moment. But just to say, we're not going to be doing anything new in the project from a technology perspective. We're going to be using the stock standard mining techniques that are employed in South Africa, what we call hybrid mining, which is mechanized development with conventional stoping. The processing, again, is typical MF2 plant. South Africa, again, is the world leader in concentrator plants related to PGM concentration. And then we be producing a high-grade UG2 ore concentrate, which is very much in demand from a smelting and refining perspective, because that's what the smelters and refineries basically on the western limb of the Bushveld complex use. And we have been engaging with the 4 major mining companies about offtake arrangements in relation to that. So it's a project which is going to be producing some 400,000 ounces of PGMs on an annual basis when we've completed stage 2. It has got a post-tax NPV at current prices of about $1.3 billion US dollars. So very high post-tax NPV using an 8% discount rate. The IRRs are way beyond 20% on a post-tax basis, pretty close to 30%. And so the economics of the project really stack up nicely. And what we've been doing now is really focusing on the specific definitive feasibility study work, which we'll get into in a moment.
Alongside Platinum's market-leading performance in 2025, financial regulators in China recently approved the launch of Platinum and Palladium futures and options contracts on the Guangzhou Futures Exchange. Can you just give us a quick explainer on why this was viewed by some experts as a significant development?
Alex, absolutely. I mean, the big issue here is that China is the world's biggest platinum market, accounting for over 30% of platinum demand, for example. And that goes into both industrial applications and into jewelry. The big issue about a futures exchange, and obviously Guangzhou futures for both platinum and palladium, basically enable you to have price discovery. And that really, it's a mechanism for encouraging liquidity, price discovery. But most importantly, it's a mechanism that the domestic fabrication industries in China can use for hedging price risk. And that's one of of the negatives that we've had in the past. The lack of a hedging instrument effectively meant that stocking too much platinum exposed you to the full price risk of when platinum prices were volatile. And so what this does is really enable them to hedge, and that means greater stocks that can be held by both the jewelry fabrication and the industrial fabricators. These are really nice, exciting developments. It'll certainly reduce price risk, and when you've got reduced price risk, it complements extra stocking, extra fabrication, and obviously more liquidity in the supply chain into the Chinese market.
Now, also of note for PGM investors was the 2025 Hydrogen Council Summit, which took place in Seoul last month and featured a host of the world's largest industrial companies. As a PGM mine developer, how are you looking at the hydrogen sector as an emerging source of demand?
We are looking at it very favorably, and the reason for that, just if you look at South Korea as an example, they've got over 200 hydrogen refilling points which they're using for their bus fleets. Just a remarkable example of how the infrastructure is being rolled out. Why is green hydrogen so important to platinum? Well, in proton exchange membrane fuel cell technology, the membrane in the fuel cell is effectively platinum, and it is very efficient. The energy efficiency levels that you achieve are up to 70, maybe 80%. It's completely clean from a outputs point of view because there's no combustion process that takes place. Effectively, the hydrogen, when it's passed through a mitochondria, liberates. The electron is used in absolute green energy. There's no combustion. It's basically an electrochemical process, just producing a bit of water and a bit of carbon dioxide, industrial grade carbon dioxide. And so what's important about this is that in heavy duty transport, trucking, railway systems, shipping, hydrogen is definitely going to play a role. At the World Platinum Investment Council, I also chair the World Platinum Investment Council. We have a view that the levelized cost of running a green hydrogen bus fleet will pretty much get close to that of running a diesel fleet in the next 10 years. And that's going to be because of the massification and densification of the production of green hydrogen globally. The technologies will continue to evolve to get the cost down. The big issue is obviously the cost on the green hydrogen side. And as that evolves, Alex, that's going to be an interesting part of demand on the platinum space side. And it's interesting to note, even companies, some of our major mining companies like BHP, for example, shipping company, they've just signed a deal with them to have 2 of their iron ore carriers being dual fuel carriers. One fuel is diesel, the other fuel is hydrogen, and that's just another exciting example of how one can continue to see green hydrogen being evolving, in heavy duty transport.
And finally, 2025 has been a big year for both Southern Palladium and the broader PGM market. So as we head into 2026, what are the key milestones that investors should be looking out for as SPD looks to unlock the full value of the Bengwenyama asset?
Alex, as mentioned earlier, when we did our optimized pre-feasibility study, we used a pricing deck which was about 30% lower than current spot prices. And the post-tax NPV was sitting at $857 million in the 2-stage development process that we were talking about. If you take a 30% uplift in prices, that basically gives us a total post-tax NPV sitting somewhere around 1.3 billion US. So it just shows you the leverage of this project to higher prices, which is obviously very exciting. And so at the moment, the share price, it's obviously improved quite a bit over the last 4 or 5 months. We're still not yet necessarily having a value conversation about what the share price should be relative to the actual inherent value in this particular project. We've got a fantastic community that are part of our development of this mine. This community, the Bengwenyama community, through the Bengwenyama Yamaswazi Traditional Council, have been very supportive of everything that we've done so far, all the drilling. They're 30% equity holders in the underlying mining asset itself, and they see this as a significant way of not only generating massive opportunities for young people in the area, but also in terms of uplifting the entire community as shareholders in the company. So some of the critical near-term developments, I'm going to just unpack 6 value catalysts that we think are going to unfold over the course of the next 12 to 18 months. But I think the next 12 months is probably the better way to look at it. Those 6 value catalysts include the mining right. We think we're pretty close on that with government. We have met all the Section 23 requirements for the grant of a Section 22 mining right. So hopefully anytime soon we'll see that mining right coming through from government. And we've been engaging with them consistently on the importance of this project. I mean, this is going to be one of the biggest new platinum investments in South Africa in some time, and it's going to have big impacts on, as we mentioned, on that community, etc., etc. The second value catalyst is we have raised that extra 20 million Australian dollars. That gives us sufficient funding to take us all the way through to FID, but it also enables us to start what we call early decline development in the southern decline ahead of FID. We are that confident of the nature and structure of the reef and the ore body. Early decline development, as I mentioned earlier, would be intersecting reef at 50 meters in the sudden decline, and that's a very significant part of just demonstrating proof of concept in this particular project. The third value catalyst is we are looking at finishing definitive feasibility study, the DFS, and the bankable feasibility study work in the second quarter of next year. We're expecting, fourthly, on the fourth value catalyst, to obviously provide some metallurgical results and progress sometime during the first quarter or early second quarter. And those met results are, been doing extra met drilling at the moment. We've got 7 drill rigs on site, and that's all part of the met work that's happening right now. And that's obviously important from a DFS level perspective. And the fifth value catalyst is offtake arrangements. We are looking in the short term, all level offtake arrangements with third-party concentrators in the area. So it could be interesting to see something announced on that maybe in the next 6 months. That would obviate us having to build our MF2 plant, the concentrator plant, straight away, or at least it would enable us to access cash flows earlier while we build our MF2 plant. And secondly, on an offtake arrangement basis, we will be engaging the larger mining companies in South Africa who have owned the smelting and refining industry to potentially look at a smelter offtake arrangement that's for smelting and refining. And then finally, number 6, the sixth value catalyst is obviously moving towards FID, final investment decision, and we anticipate FID to take place sometime in the third quarter of 2026. And so I think 2026 is looking not only really exciting from a company level perspective, we have been adding to the capacity within our internal team. We have an excellent consultancy team who are coordinating the DFS level work for us. Obviously, we've got other specialist companies that are doing the DFS level work on plant, on tailing storage facilities, on ESG related matters, on mining infrastructure, on the box cut and south decline, et cetera, et cetera. So lots of work going on there and lots of good progress made. And so that work is obviously continuing and will produce some very interesting results early next year. What's been interesting about the project is we've delivered, as we said we would deliver, normally ahead of schedule, normally under budget. Certainly when we produced the PFS, we had been funded to PFS level, but we continued, because we had done it under budget, we actually achieved our optimized PFS work also using the original money that was raised at IPO level. So yeah, there's a lot happening, but I've also got to say that it's great to have the PGM market space continuing to look positive. In many different aspects of the PGM market space, we see continued deficits in place. Mine supply from South Africa has been falling for the past 10 years. Our view is that mine supply will continue falling for the next 10 years. There just hasn't been a huge amount of new investment in South African mining on the PGM mining space over the last decade. And so interesting to watch that space, and the demand profile continues to remain strong in all the different categories. Automotive, that's catalytic converters. Remember, we've got Euro Stage 7 standards being applied from November next year in the European Union, for example. The United States has been rolling out their federal Tier 3 emission standards during 2025, as an example. The Chinese are lifting their emission standards over the next couple of years, also particularly in heavy-duty diesel. So yeah, some interesting developments. Good demand on jewelry, good demand at the industrial level, and then obviously good investment demand taking place in the PGM space. So yeah, we certainly see a continuing support of tailwinds and a year 2026 which is going to be further transformative for Southern Palladium as we continue to have more of a value conversation about what the share price is going to be going forward.
Thanks, Roger. As always, really appreciate your insights. Thanks for joining me, and all the best.
Alex, thanks for having me.